thank you all, and sorry for the wait. We had started discussing women in banking already in the speaker lounge, and so that's why we got a little bit delayed. Again, welcome to the Banker Tent. My name is Silvia Pavoni. I am the economics editor of The Banker, and I am going to introduce you to my very interesting and qualified speakers. We have with us Brenda Trenoden, who is the Managing Director and Head of Financial Institutions Group for Europe at ANZ. Brenda is, for anybody that has an interest in the gender issue in the professional world, you, I'm sure, are familiar with Brenda. Brenda is the global chair of the 30% Club. So on top of having wide experience in banking and around the globe. She has lived and worked in a number of different countries from Asia, Europe, North America. She also has a very good understanding of the subject at hand. We also have helping us discuss the broader social implications and reasons behind the gender gap, particularly in financial services and banking. We also have Diane Perrons, who is a professor at the London School of Economics, and Diane is in charge of the Economic Geography and Gender Studies and is the director of the Gender Institute. She has looked at obviously the issue of gender inequality across a number of outlets, and I believe she's also provided advice to the World Economic Forum in terms of agenda setting, and has looked specifically at the issue in financial services. We also have with us Samina Akram, who is the founder and managing partner of Samak Ethical Finance. Now, Samina has a really interesting personal story to tell us. She started at Merrill Lynch, and from a back office position, she rose to expand the Islamic finance offering in wealth management at Merrill. And she will tell us about the difficulties in pushing the agenda in the extremely male-dominated world of Islamic finance. And we also have Yasmin Chinwala, last but not least, who is partner at capital markets think tank New Financial. And Yasmin helped provide the data on which the Gadia report was based. And now, Janan Gadia was meant to be here as well for personal reasons. Sadly, she can't join us, so she sends her apologies. And again, if you are familiar with the subject, she conducted what is now called the Gadia Review that looked at the gender gap in the financial services sector in the UK. So, first things first, why do we care? Why do we care if there are enough women on boards, senior positions in financial services and banking? So if you're not quite sure why, I'm going to give you a couple of figures, aside from the fact that intuitively we assume that it's good, it's a good thing. But people did look into it. So I'm going to give you a few stats from a relatively recent report by Credit Suisse, where they found that over 3,000 companies worldwide and across sectors, companies where at least one person on the board was female, was a woman, outperformed their peers. So they outperformed the companies where the board was all male by 4 percentage points, which, if you are an investor, is actually quite good. This is a return on equity, so it's something rather appealing. Then we also have some stats from PwC, who looked at 20 markets, financial services. So they found out that women actually are larger in number than men at the beginning of their career. The number from 60% then drops to 25% when we look at middle management, and only 19% in senior position. And then we have the Gadia Review, to which Yasmin helped put together the data. So in the UK, in financial services, boards on average, the ones with only 23% have a woman represented on the board, and we go down to 14% when we looked at the executive committee. Banks, however, do rather well, so 31% of boards and 24% of executive committees. But the new guys on the block, the fintechs, they are actually performing quite bad. So we have 7% of representation in boards and 16% when it comes to executive committees. So these are some stats to get you started with. So it's not just a pretty topic to talk about. It's actually, there are some figures that make it rather important. And I would like to now ask our panelists to share a few initial thoughts on this. So where are we when we look at female representation in senior positions in banking and financial services? And Brenda, can we start with you?
Sure. Well, thank you very much. And I think, first of all, from the stats that you've given us, clearly we're not in a position that we'd like to be in. However, I think, we have come a long way in a relatively short time. The 30% Club has initially been very focused on women on boards and very much as a business imperative. We're not suffragettes. We're not doing this because we want to have equality. We look at the research that you pointed out about the performance of companies when they have better balance at the top. So when we started in 2010, and just before the Davies Commission launched, there were 12.5% women on FTSE 100 boards and 21 all-male boards. At the end of last year, at the end of the campaign, there were 26% women on FTSE 100 boards and no all-male boards for the FTSE 100. And so that's a lot of progress, and that's voluntary. That's through setting targets, not through setting quotas. So, I would say we've come a long way, but we've got a long way to go. To your point, when you start to look down into the executive layer, executive committees, and the senior management, particularly in financial services, in banks, but also in fund management, we're actually in some cases going backwards. In fund management, we've got about 8% women in frontline roles, and that should be the ultimate, meritocracy in terms of work. In banks, what we recently found in the 30% Club, we did a study of 20,000 university students in the UK. We were looking at their aspirations, what industries they wanted to work in. And financial services was the 4th choice for young men, but it was the 12th choice for young women. And that gives you a sense of the perception out there that young women have at university age about how successful they could be or how they think they would like to work in financial services. So I think we have a big piece around culture. And the culture won't change until we change from having a dominant culture that is not inclusive to others. So I guess I'm a hopeaholic, and I borrow that from Gloria Steinem. It's not my own term. I think, the momentum that we've seen, and certainly the discussions that I have now, and I speak on this topic a lot. All my clients, I run financial institutions at ANZ in Europe, and all my clients want to talk about this. So I have a business meeting, and the first half is about business, and the second half is always about diversity. And they say, can you come in and speak to us? Can you speak to our board? Can you come and talk to our teams? They all want to know how they can change, and that is really positive. And I think the noise levels that we see in the media, the work that we see from the government is also very positive. So is it where I'd like to see it? And do I think that financial services feels really inclusive and great? No. But I think we're on a good track. So that's a very long-winded answer, but I think that's where we are.
Very good. So we're moving from Brenda's hopefulness to Diane. I think Diane may have a bit of a more pessimistic view.
Well, I love the phrase hopeaholic, and I'm going to be one, but my evidence suggests that I need a bit more evidence to rationalise this way of thinking or way of being. However, I also think it's very important to recognise continuity as well as change. I think I'm older than anyone here. And when I was trying to hire a television set, I had to get my husband's permission. And that was only in the 1970s, mid-70s, I think, from memory. So looking at a slightly longer term and trying to explain some of the phenomenon underlying the kind of pervasive culture, which in many ways is highly gendered, I think it's important to look across 3 levels, both the state and society generally, firms, because firms can't do everything by themselves, as well as the household level. And I think one of the key aspects of change is to think about the asymmetric nature of change between women moving into paid employment and men not taking up the kind of inevitable care deficit that results as a consequence. There's only so much care work that you can commoditize, and the spaces that are left are invariably filled by women, apart from the well-publicized man who contributes much more. And this is important because it limits women's opportunities in work, it constrains what they can do. But more than that, I think it influences understandings about their capabilities, and also influences understandings about appropriate roles in society, but also conceptions about what constitutes leadership and what's necessary for those kinds of things, which in turn impacts on the discretionary elements in pay and promotion awards, which, again, where discretion exists, some form of discrimination and difference emerges. So even when change is happening, the old processes seem to keep creeping in other ways. So I think it's important to think about things at those levels, both, and then to think about what and what in fact the state can do, what can be done in households. But just thinking a little more about the macho culture. This prevailed very much in a private banking organisation I looked at in all sorts of ways, apart from the very important non-transparent elements in pay and promotion. There were just all the little things like the kind of after-work activities, the organisation of away days and so on, which were very off-putting to women and, in a sense, contribute to thinking about why it is that women leave at mid-tier level.
Whether they have a family or not.
Yeah, well, no, not whether they have a family or not, but also the kind of environment which they find not conducive to working within these organisations. Not only supportive from a family point of view, but also supportive from the kind of prevailing attitudes towards them. In terms of thinking about what the state might be able to do in relation to this, we had this commission at the Gender Institute with report online, if anyone would like a copy, just to sell my report here. That showed what we recommended there was the establishment of a national care service, rather like the health service, which would change the kind of social infrastructure, providing elder and childcare. And actually another study I've done suggests that actually investing in that contributes more to growth and output and employment than does investing in roads and bridges, if you have a more kind of Keynesian stance to you're trying to deal with the present low growth situation. But also, in terms of leave arrangements, they also can be very different. We have shared leave in this country, but unless they go for the kind of ways in which part of that leave is reserved for men on a use it or lose it basis, it's very unlikely to have much impact. The take-up rate by men of shared leave currently is very, very low. And I would advocate quotas, but I think that's something that we can come to later.
We'll address that later, yes. Thank you, Diane. Samina, I would like you to share with us your experience and how perhaps you can represent an example for others.
Thank you so much. So I began, having worked for investment, private, commercial banks, I began my journey at Merrill Lynch in 2005, and I actually, as Silvia said, started in a back office kind of support role. So I think, to me, when I first began banking, I didn't quite understand what it was. And where I would find most peace was actually, the kind of initiatives Merrill Lynch was involved in. So, going to some of the local schools and talking to children and sort of getting involved on, during Christmas time, we'll have the various people that will come in from, organizations, and they were lonely or things were going on, and we would meet, these really interesting people. And I think in my day-to-day job, I was clearly just bored. So by joining various diversity initiatives, really getting involved in that kind of aspects of the organization, I started meeting very, very senior people. I soon was invited to join the South Asian Network. And in my day-to-day job, I was covering the Middle East markets in a very kind of KYC compliance type of role. So I was picking up that Islamic finance was something that everyone was really interested in. And being a Muslim, and my degree, I didn't have the MBAs in finance or anything. I actually studied philosophy and psychology of religion, so I really didn't know what I was doing at Merrill Lynch. But sometimes I think maybe I was there to show them the light. So then I used the South Asian network to basically organize a lunchtime seminar in Islamic finance, and we had maybe 300 people that turned up, and this was just within London. And because Merrill's is obviously, we have offices in 40 countries around the world, so this was also broadcasted to all the offices. So now forget my 9-to-5 job, I was the face of Merrill Lynch Islamic finance. When you work on a really good idea, and these networks work because they bring people together, they bring ideas to the surface, and ultimately they drive revenue for the firm, because all of a sudden I was receiving so many emails from so many different parts of the business saying, I've got a client here, he wants to structure this in a Sharia compliant way, what the hell is Sharia, how does this work? And so now they're kind of seeing someone to go to. So all these business leads that I was developing, and then also because we'd worked on such a brilliant idea, all of a sudden HR and diversity and everyone's trying to jump on you. So I thought, nah, that's not going to happen. You have to protect your ideas. So I went straight to the EMEA chairman, who was the main sponsor of our forum, someone called Bob Wigley, and I'm sure a lot of people within financial markets would have heard of him. So I went and met with him, and I explained, the event that we had organised, and frankly asked him what he was doing on Islamic finance. And I think at that time, because I was so junior, I could actually get away with asking those questions to someone very senior at the organisation. And so he then put me in touch with the Interbank Multicultural Network, which was a collaboration of the top 10 investment banks. So you had like the UBSs, the Goldmans, the Deutsches, and we would meet once a month in each other's banks. And to ensure neutrality, the chairs of the forum would change. So one month UBS and Goldmans will be chairing, the next month another 2 chairs will be chairing. So one day, going around the table, I picked up that Islamic finance was being discussed as part of the diversity efforts within Deutsche Bank. So Deutsche had just done, they had Gert Bossier at the time, who was heading up their emerging markets desk, and Islamic finance was under his remit. So he'd flown out to Dubai. He's Belgium, Christian. What's he doing so passionate about in the Middle East, promoting Islamic finance? So he came to London and spoke a bit about what he was doing. And UBS had done an event on how to do business in the Middle East, and Islamic finance was coming up. So to cut a long story short, I saw that this was an idea that was being discussed amongst all the investment banks. So I asked, went around and I said we should do an event on Islamic finance as a collaboration. So it took
and
place,
everything took off after that. So you found yourself a good idea. You went and found the right person to speak to, and you got yourself a mentor as well.
It was really the diversity. I mean, the Interbank then created my role to now start leading Merrill Lynch's diversity efforts, and it just got crazier and crazier. So I'm a big fan for these women's network, these black professional networks, because I think that's the one way organisations are actually bringing so much talent together.
Okay, so a bit of a positive story here. Sure. Thank you. Yasmin, how do all these experiences relate to the data that you so meticulously put together?
Hi, I'm Yasmin from New Financial. So we looked at 200 companies across UK financial services. So that's not just UK companies, that's international companies with significant operations in the UK. I'm getting really out of breath already because just from talking, sorry.
That's very right.
But basically, just adding to Simona's, Silvia. I'm sorry.
That's quite all right.
It's very hot in here. I'm really sorry. To Silvia's point about the headline figure, really, the takeaway figure was for the whole sample of 200 was female representation of 23% on boards and 14% on excos, and that's kind of my first point to really make to you that there's a big difference between boards and excos. It's not rocket science. You can see those numbers are very, very, very different. There's 50% increase from excos to boards. Why is that? So there's lots of amazing work that the likes of the 30% Club has done, that the Davis Review of Boards, Women on Boards has done. There's been a huge amount of focus around boards. That's where the majority of the investor engagement happens. It's around boards. Has that filtered down to excos? That's exactly what our data shows hasn't really happened yet. So whether or not, it's about trying to now focus on the management pipeline. Again, as Brenda just mentioned, that's where the 30% Club, for example, is extending how its own approach. Our government in the UK is doing the same thing. So starting off with the Davis Review of Boards, they're extending that now to the Hampton Alex. I'm sure Brenda's going to mention that later. And also then the work that we contributed to was quite specifically part of the economic productivity plan for the government. So this isn't about, this is a social justice agenda, 50% of the population are female. It's actually about productivity and the economy to get more women working into more senior roles and to increase female labour force participation overall. So that was the drive why the government asked Jane Ann Gardier to look at senior women in UK financial services, and that's hence we did that data. So the next point I would just want to make was, however we cut that data, so we cut it by country, by ownership, by the number of people on the ExCo, the average percentage of women on ExCos stays very stubbornly around 14%. Either a couple of percentage points higher, a couple of percentage points lower, but it's around 14%. So that to me says that there's some kind of baseline that without concerted effort, without public scrutiny, without really focusing on the management pipeline that feeds the executive committee, we're stuck at this 14% level. We're just stuck there. And actually, interestingly enough, again, 14% is very close to the 12.5% starting point back in 2010 for FTSE 100 boards, as Brenda just mentioned. That's the baseline. So if we want to move beyond that, we've got to really take action and make choices about how we're going to move that. The other big thing that we looked at in the data was we looked at we sort of captured the female representation on executive committees and boards. Now, I get asked all the time, that's really interesting. Do you have any data just below that, looking at management? No, I don't have that data because it's not publicly available. Hardly anyone releases this data, and I can give you very, very precise numbers on the percentages that do, but they really, really don't, because it's very, very guarded. It's very, very, people are very, very proprietorial about this. They don't want to, and obviously, especially in financial services, the numbers look terrible. There's no two ways about it. So they don't want to talk about it. The executive committee we have to take as being the ultimate expression of the management pipeline is the way I look at it. And even that is not very visible. So just to give you an idea, our team, we just worked flat out for 6 weeks solidly just to try and find this data. And there was a whole load of sources we looked at. You think even for a FTSE 100 company, and I'm not going to name names, but they exist, they don't list their executive committee members because they don't have to. Lots do because they want to, but there are plenty that don't. So this is not really...
20 don't list. Out of the FTSE 100, only 80 list their ExCo.
And within the sample we looked at, there was only a handful that are in the FTSE 100. So you can imagine that. So it's not a leap of faith to understand that there are lots and lots of companies that don't. This data is not really readily available. It's the most readily available, but it's still not readily available. So there is a big gap in actually the data set that's out there. But when we gathered this data, what we found was that when women do sit in senior roles, they tend to be in support functions. I don't think I'm rocking your world in saying that. I think I'm reinforcing what we believe intuitively to be the case. But rather than in C-suite or revenue-generating roles, women sit in the support functions. So, unfortunately, support functions only account for, in our sample, 25% of ExCo roles. So if you've got lots of women in support functions, but those functions tend not to sit on an ExCo, you've got a problem. And the other 75% of the ExCo, so about half of those are C-suite, half of those are the P&L. So that's a very significant finding. The knock-on of that, just to quickly touch on boards, is that this is also why there are far fewer women as executive board directors than there are men. Because in the sample that we looked at, 3/4 of our entire group of board directors, of executive board directors, have the job title CEO, CFO, or a head of business line. So if you don't have women in those functions, you're not going to get an increase in executive directorships on boards. Again, it's not rocket science. I'm telling you what the data shows us. It's showing what sort of the intuitive behind that. And so just to give you, just to make that picture a bit bigger, the ratio in our sample of exec to non-exec directors for the whole population of board members is 1 to 3. So for every executive board director, you have 3 non-executive board directors. For women, that rises from 1 to 12. So that's where the big difference comes. It's the type of roles that women are in. And just my final point is whether the industry thinks it's a good idea or PC nonsense or it's a social justice agenda driven by Brussels or whoever.
Thank you for bringing Brexit in.
I hear it all the time, and I do hear it all the time, and not just in the past week. It's now pretty much irrelevant, the motivation for that. The UK government's got a very clear agenda. For example, you know, we've seen that through the Davis Review on Boards, the Garda Review of Senior Women in Financial Services. That was then backed up by Treasury itself, HM Treasury's Women in Finance Charter, which is asking very clearly, financial services companies, hey, you have to address this. And that momentum's not going to go away.
And we'll go back to that, but Brenda, you wanted to add something.
Yeah, I just want to add a bit of colour to that. And so I mentioned that I often go in and speak at banks about this. And a couple of weeks ago, I was asked by one of the big banks, a very big global bank, to come in and speak on their client panel. And I think they probably asked me because they only had men on the panel, so I wasn't talking about diversity, but they thought, okay, FIG client, we don't usually have, other banks come in and a female, brilliant. So I came in, and it was to all their new MDs. So from around the world, from India, from Australia, from New York, global new MDs, and there were 8 tables of 10. And so my first observation coming in is there was only 1 woman on every table out of 8 tables of 10. And this is the new MD population. And this bank has made a lot of noise about diversity. And the other 2 panelists were from 2 big UK industrial companies, group treasurers. And so we all spoke, and they asked us, anything that we would change about the bank. There were lots of things. They wanted frank observations. And I commented on the diversity, and I said, look, I think, of course I'm going to comment on this. It's pretty poor. And actually, the group treasurer of one of the industrials sitting next to me, an older man, said, I'm going to go even further. He said, this is shocking and appalling, Bank X. He said, if I look around this room, I would expect you, as our bank, to be more reflective of our company. And our company is much more diverse than this. And he said, so, this is a lesson. I really want you to go back and think about this, because he said, soon we're going to start thinking about who we bank with and whether you're presenting, enough of a balanced slate of bankers to us.
What happened after?
And sorry?
What happens? Did the bank change?
The bank, well, they said, wow, okay, we get this and we understand this. And, and then the other guy next to me as well, chimed in. He had to at that point because we both said something. But that's very powerful. When a client and a male client as well steps in and starts really putting the pressure on like that. And I heard one other story like that in the UK as well, where a law firm, and once again, the law firms have had a lot of difficulty with partners and things, they realize that the general counsels who often employ them on the FTSE 100, many of them are women. And one of the big, circle law firms, Magic Circle, went in to pitch a pale male stale group of partners pitching to this female general counsel. And she said to them, you know what? I want you to go back and bring another panel, and I will actually add X% to your fees if you can produce a decent panel of partners to work on this mandate. So it wasn't even, we're gonna beat you up, but it's we'll pay you a bit more. And that law firm has started to make a lot of changes, and actually we've seen a growth in the number of partners moving up. And as I say, I won't mention names, but this is very powerful, and it comes back to being a hopeaholic. I think those are the things that people can start to do to start to lead the change. And this is why I think everybody's starting to get it. The other last one, and I don't want to hog the space, but within the 30% club, we're also really tapping into the asset owners and the asset managers. We now have a group in the UK of 27 institutional investors representing about 11 trillion in assets under management. We also now have groups in Australia, Canada, and the US. And the investors are starting to really vote against companies where they're not seeing enough diversity, not just on the board, but in their executive committees and in the chain below. And they're actually getting together this year during AGM season. They got together as a group and they called on one of the FTSE 100 companies as the 30% club investor group. And they said, this isn't good enough and we want to see change. So there's real pressure now coming as a governance and stewardship issue where they recognize that they know performance will be better when they see more diversity. But it's not all stick. At the same time, last week, we pulled in one of the FTSE 100 companies to meet with the investor group and said, you're doing a brilliant job. Tell us the impact it has. And I'll mention the company. It was Halfords. Halfords chairman came in and CEO, and Halfords have 50-50 on their board, and they have a female CEO. 80% of their business is automotive and 20% is cycles. It's a very male business. But the chairman spoke about the difference it made as the board became balanced, the dynamic, the discussions, the way people treated each other, the openness, and also about the difference in having a female CEO. So we're looking to highlight that as well. But I think, all of these things show the momentum that's really building up. And I don't think it's going to turn back.
So not much has been achieved, sadly, until now. Something has been achieved, but not too much. And hopefully there is going to be some momentum. By the way, if any of you sitting here with us would like to ask questions, just raise your hands. And, we are ready. Fantastic. So we'll bring you the mic. And then I wanted to ask Diane her view, because I saw you gently smiling as we were talking about peer pressure.
I thought I'd just add something, because I'm a partner at Slaughter & May, so one of the law firms. And actually... I think one of the things that I looked at recently was we had a list of the people we knew at the investment banks, obviously more on the M&A side. And I went through this huge list of all the people I knew, and I got to the end of it, and I said to someone, where are all the women? And it was astonishing in this list. I think there were 3 or 4 women. And that's why, the women in banking, they just aren't there. But the question I was going to ask was, one thing that seems to work quite well for us is to really encourage the current female partners to act as champions for the women coming through, because actually we have the same problem of lack of transparency at the layer below. It's not a case, I don't believe there's any discrimination at the actual decision as to who to make partner. If there is anything, it's who gets onto that list. And the way that we have, I think it really helps, is for the women in the senior positions to go out there and ask questions as to why that woman hasn't made it through to the list, or where's she gone in the process. And I just wondered if others had seen similar, of trying to get the current senior women to act as
so effectively sponsorship.
Well, except sponsorship, I think, really requires you to really understand, to believe that person is brilliant. Maybe it's a level below that. It may just be asking the question, making sure people don't get forgotten, because I think sometimes women get sidelined.
This is challenging the groupthink.
Yeah.
Well, we actually just held an event. So seeing my own struggles in the industry, eventually we set up the world's first Women in Islamic and Ethical Finance Forum. And we just held an event at Ashet on the 31st of March. And we invited 5 senior female MDs from banking. So Ileana Sedani, who heads up the, you probably know her, she's an amazing, really good champion for diversity, one of the MDs at BNY and Mellon. And, I was really surprised, because my way, at first I wanted to identify where the MDs were in banking. So I obviously went on LinkedIn and just typed in MD, Credit Suisse, Goldman. And then I started emailing the MDs. And then I went to some of my friends in the banks, and I said, I found Claire from So, what she's like, complete cow, stay away from her. Oh, she's lovely, she's really helpful, she smiles, she will take... So we were trying to identify...
Thank you for adding some colour.
We were trying to identify people that actually wanted to use their position to help other people. And to be honest, that day, just those 5 MDs on stage, it was magical. The atmosphere, and these people were so passionate, they spoke so openly, and we're going to carry on this every year now.
Can I just add a point around law firms specifically? So the law as a sector, in response to the Davis Review, which was 2011, they published their first report now. They took a look at themselves and said, okay, what should we do? We also have this massive problem. And actually in law, there's been closer to parity at the recruitment level, at the graduate level, for far longer than there has been within financial services. And in fact, it's been more than 50% female at graduate level for a considerable amount of time. And that's absolutely not the case within financial services. And even the firms that trumpet that they're close to 50% now, I promise you it's not been for more than 1 or 2 years maximum. And there's very little data around that as well. But so the law firms, the Solicitors Regulatory Authority in the UK and the Law Society went away and they said, what can we do about this? And their response was transparency. So they asked the law firms, and it is compulsory for a UK regulated law firm, to disclose certain data, and actually it goes far beyond gender, and it's very, very, very interesting. And for example, they even ask questions. Off the top of my head, there are 27 questions, and some of those actually are around social mobility as well, which I think is a massive issue that the government is trying to look at. And there's a big piece of work going on right now around what kind of factors should we be tracking, because it's a really, really important diversity characteristic that crosses everything, all other diversity characteristics. But that's how the sort of law sector responded, and the law firms, I think, are looking at areas exactly as you said. So how can we challenge because it is implicit bias, or there is some kind of bias going on where you don't have women onto the high achieving streams at the right point in their career for them to make partner.
Okay, so thank you. There is another question, and then I wanted two questions. Okay, from a man, we have to take it. And then I wanted to go on to the subject specifically of how organizations can modify their structure, or what are the measures we need to really go ahead with the final push.
Hi, so the question is as follows. We have a lot of push at the entry level because we can monitor the data at the entry level.
What organization do you work for?
So I'm at Cambridge University. I'm an ex-banker. I used to work for Dresdner Kleinwort when they still existed. So the question is as follows, that we have a lot of data and a lot of understanding of what happens at the entry level into banking. We have a lot of push at the very senior, the executive and board level. However, right there in the middle, the VP death trap, right? That's, I think, where there really needs to be a lot more work done. It's the women who come into banking, who start their careers, who get promoted really quickly, then get married, have a child, and then when they try to come back, they hit a wall. And that's some sort of data that could be easily trackable, is how many women come back from that kind of perspective. And how do we tackle this VP death trap? Thank you.
So there's a lot of work that is going on now on that piece, and that's where a lot of the focus of the Hampton-Alexander Commission will be, is looking a couple levels below the executive committee. But also at the same time, there's a lot going on around returnships and return-to-work programs. And so you've got several companies that have developed their own programs. There's external organizations that have set up to go into companies to really create on-ramps to get women back into work when they've had a break. And we've put together a group within the 30% Club that is going and meeting all these companies and organizations and trying to put together a paper on return-to-work programs, the success that it's had, and looking at doing more research into that. But I think that's something that in the UK, we're probably leading almost all other countries in terms of the whole return-to-work ethic. So at the moment, you're right, the data hasn't been there yet, but there's a lot more going on in that space. And I think there's 2 companies I've spoken to in the past week that are setting up, that are starting to develop, these return-to-work programs and on-ramps for women. So you're absolutely right. That is a tricky point. But it's not the only reason that we're losing women at the top. Some of the research that we've done in the 30% Club shows that even beyond the having children phase, you get that bit where women are bumping up against the glass ceiling, where they're getting frustrated because they're not getting promoted. They don't leave to go and look after children or to go and look after aged parents. They leave because they don't like not getting promoted, and they're getting frustrated. So they go into other industry or they go set up on their own. And I think in the UK we have more female entrepreneurs than in any other country for that reason.
Yeah, it's a very interesting point. Yasmin, and then we'll take.
Can I add super quickly? So this is exactly what the Guardia Review looked at. So what they did, and I didn't work on the Guardia Review itself, so I'm pretending to be Jane Ann Guardia. I look nothing like her. She's a very tall, very striking blonde lady. So what they looked at, they conducted a massive online poll. There were thousands and thousands of responses to that, and they went out and they spoke to lots and lots of different types of financial services company, and then they produced this. So this is available online. Just Google Guardia review and you'll find it. But what in their findings, some of their recommendations were around data transparency, and it's precisely the data that you're talking about, that all the companies have this data. I promise you, Dresdner Klein or whatever part of it you worked in, and now whatever it's part of, they have this data. They don't circulate it a great deal internally apart from within HR, and they probably don't even circulate it beyond a few key managers because they're very territorial and very proprietorial about it. I know that from experience. They don't circulate it. So it exists, certainly for the biggest companies, but it's certainly not public, so it becomes very difficult to benchmark. But if you look in the Guardia review, there are, on page 42, there's 12 suggested reporting requirements. And just to give you a quick idea of some of the ones which are talking precisely in answer to your question, so the percentage of the company working flexible working patterns, the gender split of those employees working flexibly, the percentage of maternity, paternity and shared parental leave employees returning to work, and the gender split of those employees leaving the firm over the last year. So this was a look at what's best practice, what kind of data should companies be recording and sharing. So the call is there, and now it's up to companies, in financial services companies, to respond to that.
And we should probably mention that it's based on the Guardia review offered the base to the UK Treasury Women in Finance Charter, in which companies are encouraged to disclose such information and to be held accountable when it comes to the results to show that they have improved, narrowing the gender gap. So I want to take the questions from we have three questions. Oh my goodness, so many. Okay. Yes, let's take questions. This is more about you asking the panelists, but I also wanted then to talk about quotas, because that's when the discussion fired up, when we're having, I would say, in the speaker room. Okay, let's start from the gentleman there at the back.
Okay, thank you. So I actually had two questions. I'll leave the quota one because I think it might get addressed a bit later. So one thing that I've observed is that we talk a lot about the number of women at certain senior levels. What I'm curious about is there's also a pipeline issue, right, for lack of a better description. So if you think theoretically, what does it take to build a doctor, right? They need the primary school education, high school education, they need to study at the university, but they also need some other social factors to spark their imagination to want to actually do that. How much effort do you believe is being done, if any, and needs to be done in order to actually change the grassroots ideas of how women approach the workplace? Related to that, and maybe slightly adjacent, is having managed teams of males and females, I've observed quite openly that men are very open about wanting to get promoted. They're very, very open about saying, I want more money, I want a better title, I want all these exciting things. Where I found, and this again is very biased based on a very small sample, women are less so. So it comes to my mind that there has to be a lot more done further down the pipeline to sort of change the ideas of what women are expected to do or how women are expected to behave. How much of that work in the pipeline is actually being done, or are we just concerned about, okay, at the executive level we've got 12% or 14%. There's a whole path before that needs to be looked at.
Preparatory work, and I need to add also that when women do ask openly about promotions and pay rises, they are sometimes seen as difficult. So that's the label that you also want to avoid. And I'm seeing a lot of you nodding. So I wonder whether there was also another question on the same lines. So shall we group the questions? So I'm going to take all of the 4 questions together, and then we'll address them to the panel. So if we can move the microphone all the way up here, please. Thank you.
Speaking of the VP death trap that I've just escaped, is there research at that level that can shed light on what that journey is like, and talking about women who get fed up and just move on to something else? Why wait? If an organization isn't going to support you through that, why waste my talent in that kind of place? The top, as you say, are very keen, and the people at the bottom are very keen, but the people in the middle are not, because it's very competitive at that level.
Okay, so what to do to keep them there? So third question at the back. So if we can move the microphone. Thank you all for helping in passing the microphone along. It's a tight room.
It comes into the quotas piece a little bit, so I won't dwell on it too much. But I hear a lot about influencing and trying to get change happen from inside. But isn't it time to get a lot more angry and actually get a lot more in terms of legislation? Because it feels like there's a lot of women I work with who are a lot better than me at their jobs.
Right.
They also earn less than me, and they won't get as high as me. Now, if it was happening to me as a man, I just wouldn't tolerate it, and I'd be on the streets and I'd be putting bricks through windows. I'm not getting that sense from women.
Where do you work?
Well, I run my own business. I run 2 of my own businesses, thankfully, so I can do what I
Is
please.
it the fintech company?
No. It's a ski wear brand, and I do some consultancy on the side to fund that. But for me, there isn't really that anger there. And that's what really worries me, is that my female friends will complain about this down the pub with me, whether it's equal pay, whether it's through the glass ceiling. And I'm just not getting that sense of, let's just smash things up a little bit, or maybe the government should legislate.
Okay, so women should become more aggressive, more like men, to get men to
not
do
necessarily more like men.
Maybe.
I just feel as if there's a lot of the panel talking a lot about
aggression usually is seen as a male characteristic.
It is, but I think there's a lot of stuff on the panel about influencing.
It's a valid point. Okay, let's get another question. I think it's the gentleman here. I will add your question as well, and then I think that will have to be it. Otherwise, the panel won't have any time to answer.
So I just want to bring to the attention of the panel that this is not only a problem of gender, but also of ethnicity. So again, if you include women within with the ethnic background within those proportion of women that you have in your statistics, it's probably going to be even further down. So it is, I think, a general problem that the financial industry needs to look at rather than just the gender. I do research. I'm from the Cass Business School, which is just here.
Thank you. Our neighbor for today. And the final question.
Thank you very much. I'm from across the pond, and one of the I'm wondering if something we see is relevant to you here. We have, discrimination is outlawed, but we have found that there are really very much subtle implicit biases. So we have, I live in Massachusetts, everybody is so politically correct, nobody's racist, nobody's sexist. But in point of fact, there are a series of implicit biases that many of us don't recognize. And that influences behavior. So I see, for instance, somebody said that why don't women just stand up and say something? And Sarah, you also mentioned something to the effect where you mentioned that there should be more women considered. Why don't, when you see that list, ask your colleagues, well, look at this list. It's all, pale, male, and sale, or whatever you want to say. Can you rethink this list, and would it make sense for you to include people of color or women? I mean, does it, just because I think there's an implicit bias when people come up with their faves. Their favorites are guys. And the second thing is, I think, and I don't know if this is true, but you mentioned, Brenda, that you were on a panel and you discussed an issue and presented the fact that women were not represented. And then a man came up and said next to you, I think it was a man, this is really a problem. Some of the linguistic research over the United States has said that when women present something, it's not usually taken up as a point of order. But when a man restates that or states that is somehow very acceptable.
Well, but in this case, it was also a woman talking about female representation who leads the 30% Club. They know that I'm not objective. So this other guy was not leading a diversity initiative.
Correct.
And was just a client. So I don't think it was as much the man and the woman, but I think they would expect me to say that, but they weren't expecting him to say that.
Correct. That was tremendously helpful.
Okay, so great. So let's try and answer the question. So how do we improve the pipeline? How do we keep women in middle management position to allow them to then grow? Should we get angrier and maybe force the legislators to force change? Well, we are including various subjects, obviously, here in diversity, but we probably need to try and focus on women for the next 10 minutes. And unconscious bias, yes, or maybe conscious bias, how do we address that?
Silvia, can I very quickly answer the last question from the gentleman from the Cass Business School? So we did a piece of research looking at diversity disclosure. So this was looking at annual reports, CSR reports, corporate social responsibility reports, looking at company websites, looking at diversity reports, all the stuff that no one except academics and nerds look at. So half those downloads from those companies are from me and my team. But anyway, what we looked at was, what do companies already tell us about their approach to diversity? That wasn't just data. We ended up looking at 57 different criteria. But to boil it down into one chart, and this room is small enough you'll be able to see it. If you can see this one here, there's a nice positive gradient on that line. So what we have on the x-axis is the score on gender disclosure. So that's all gender-based criteria that we looked at, which was approximately half of the 57 criteria around gender. The other axis is non-gender diversity characteristics. So what we found overall is where you have more disclosure around gender, and disclosure being the only way that we can have a feel for what is being done around gender, you tend to get more around non-gender diversity characteristics. Gender is the way to open the door and to have that wider discussion, which is why it's the obvious first focus. And also, you don't have to ask people, you know, whereas self-reporting for other diversity characteristics is a very, very complicated thing that financial services also has to get to grips with.
But even further from disclosure, research has shown that when there are more women in senior positions, there's more diversity beneath. And so when I often speak to CEOs and chairmen, particularly in the US, and I ask them to sign up to the 30% club, they say, well, that's not my main issue. My main issue is racial diversity. You know, we need more black people, we need more Spanish people, etc. The first thing I say is they're not mutually exclusive, number one. But number two, I can promise you, when you start with gender and you have more women in senior levels, they will hire more diverse candidates, and research shows that. They do less of the mini-me than men do. Maybe because they've faced it themselves. You know, I can't tell you why that happens, but research shows that when you start with that piece, precisely to your point, it opens the door to everything else. So I agree with you. We need to look at the whole thing, but I think starting with gender does help everything come beyond race, you know, LGBT, age diversity, everything.
Thank you, Brenda. Perhaps this is explained by the psychology. But I know that psychologists, I did do some quick research earlier. So Gerd Hofstede, and I found it very interesting. This psychologist put together a masculinity index, so by ranking countries. So you by aspects such as placing value to elements such as achievement, competitiveness, heroism, assertiveness, material rewards. So those are all traits associated to being a male, I guess, to the masculinity side of all of us. The UK kind of scores halfway there. The Nordics much more feminine, apparently, according to this index. But anyway, just a little side to explain how come women mentality tends to be perhaps a little bit different. But Diane, please.
Yes. I mean, I really don't wish to be patronising, but I did hear more or less everything that's been said 20 years ago. And there was a speaker who said the time is now. I think I read that in one of the reports I've looked at recently. And therefore, I tend to agree with the gentleman at the back here saying the time has come to become somewhat angry and to think about challenging the overrepresentation of men rather than always problematising women. However, you know, to come to some specific questions about the leaky pipeline and how that might be addressed, I very much agree and find similars in the banking firm I looked at regarding our colleague from Slaughter and May about the middle and people leaving. But their problem was they couldn't find anyone. The women were absent to be kind of mentors, I mean, not necessarily sponsors. And so the talent was not recognised because of all the kind of ways in which many perceptions of qualities are also imbued by gendered social norms, which are very, very pervasive and very, very difficult to tackle. I also think there's a reciprocal relationship between presence and people's understandings about what they would like to do as they're growing up. And so to the other gentleman over there, to think about why it goes right from the school to the boardroom or wherever, and thinking there about the significance of profit and loss positions, business-facing positions, I believe they're called, and to think about the kinds of subjects women do, men do, are very, very different, and so to prepare people for lives in a diverse range of activities. But presence in positions influences what people think they can do, and for these reasons, because of the time that it's taken to move to where we are now from where we were, I really think that some more direct action needs to be taken, and for this reason I do support quotas. They would not necessarily need to be 50-50 in the first instance. They would have to be tailored to the specific kinds of qualities of people's firms, but only in that way will we begin to see women being more present in organisations and and adopting a wider range of attitudes to shape the working environment, to do something about the ridiculous working hours that people have in the law firm. I'd like to ask a colleague from Slaughter & May whether you do anything about your long working hours, which I mean, particularly in the corporate sector. My daughter was working in one of the magic law firms and experienced them directly and moved out to a different role. So that has a very detrimental effect on people wishing to combine work with families. So there are many things which need to be addressed, but a short-term change might bring about longer-term change more quickly.
Okay, so you're in favour of quotas, mandatory quotas?
Mandatory quotas, but they don't need to be 50-50.
No,
and
some
experience suggests that once they've been introduced, they're no longer necessary after a year or two.
Okay, so very quickly,
has effect.
Thank you, because we only have a few minutes. Samina, quotas, yes or no, and do they need to be mandatory?
Yes, and they do.
Yes, they do. Okay, Yasmin.
Can I very quickly to that nice man? Do those women know that they are being paid less than you for the same kind of work?
In some cases, yes.
Okay, so in some cases, when you say some, it makes me think majority no. Yeah, so therein lies the problem. It's, for me, I believe very strongly it's a massive transparency issue. There's a lack of transparency. That is how the government is tackling this. They're really pushing on this transparency issue. The financial services industry, the entire majority of the legislation that's come into place since the financial crisis has all been around transparency. And so it's been a massive pill for these companies to swallow, but this is an extension of that. So for them to have to start disclosing this data, and just to very, very, very specifically tell you what the Women in Finance Charter asks for, it's a voluntary initiative. But if you have the Treasury saying to you, you kind of need to sign up to this. I mean, it's voluntary, but, we would like you to. The Treasury it's a significant part of government, so that we are a step away from legislation, but I personally don't think that we're not on a path a million miles away from it.
Without consequence, to be transparent, without consequences, when you're being transparent, there's no reason to do anything. So
Pressure may not be enough. That's what you're saying. Okay. All right. So Yasmin, I'm presuming you are not necessarily in favour of quotas, and
personally, I am. As I've got older, I've become very militant.
Okay. Good. Brenda.
Well, my colleagues in the front row know that I am extremely militant, and certainly I do get very cross, and so perhaps I'm being a bit too soft up here on the panel. But I don't believe in quotas, and actually, I believe that business-led targets are very close to quotas, and I think having quotas in the background is a threat. If business can't get there on their own, is very effective. And we certainly wouldn't have made the progress on boards if there hadn't been that threat in the background. But I think if I look at Norway, when Norway introduced the idea of quotas, there were 570-something listed companies. When they actually implemented quotas for their boards, there were only 100 and some odd listed companies. So, the companies all delisted to avoid it. Some of them added board seats. And actually, below the board, they've not made any progress in building a pipeline. And so, yes, I agree with much of what my esteemed colleague Diane has said. And I think many of her points, I'm absolutely, completely aligned with. But I think when you impose things on people, the way they're treated is very different than making a business case and having them take them on. And certainly what we've seen is the progress we've made. And I completely agree with you about this is a discussion that's been going on forever. I mean, I've only been in this industry for 25 years, and it's been a discussion that's happened. But the progress from 2010 to 2015 has been phenomenal, starting at boards. The executive committee and the layer below is going to be much more difficult. But I think if we impose
and it will
quotas,
take longer.
you know, it is going to have a very negative effect and very alienating. And we're about women and men working together. I think the days of being suffragettes are over. Had I lived back then, I would have been a suffragette. You know, make no
just stating your
mistake
credentials.
on that.
Yes,
but
So-
we've found success in working with men.
So I think we are out of time. I can already see the speakers waiting to come in the tent. So thank you all very much. I think we are going to end on a positive note. So hoping that the next step will be to find the right tools to give the final push. Thank you all.